Greetings, members one and all of the Salivation Nation. Why gold and silver plunged, and why prices will snap back up. Let's explore. Many of us were a bit taken aback by the price movement of gold and silver here today, but pretty big drops, almost 2% for gold, a 1.94% decrease in price. As of the recording of this video, it's down over $37, well below $1,900 now at $1,872. And then silver is down over 2.5%. It was down over $1 earlier in the day. It is now down 71 cents, well below $28. And it is $27.55 as of the recording of this video. Platinum, palladium, and rhodium all took a hit today too, with only palladium by a very small margin with under a percentage point drop. But nonetheless, there's where the metals are. And there are reasons why this is happening, and let's explore some of those here. And this is an article we're going to referencing here from Kitco, is talking about the numbers. As soon as I saw the Labor Department's numbers today, I knew that more than likely to watch out. They're going to see lower gold and silver prices. But folks, this is only temporary, and I'll talk about that here momentarily. The gold market, we're seeing further selling pressure as a wave of positive labor market data hit the marketplace. Less than 400,000 American workers applied for first-time unemployment benefits last week, falling to a new post-pandemic low. Weekly jobless claims have risen less than expected for the fifth consecutive week. Thursday, the U.S. Labor Department said that the weekly jobless claims fell by 20,000 to 385,000, which is down from the previous week's revised estimate of 406,000 claims. This is good news, for sure, by all measures. Full stop on that. It's always good to see when more people are working, and I think that's due in part to some lower pandemic numbers for the coronavirus. It's the lowest level for initial claims since March 14th of 2020, when it was 256,000, the report said. The latest labor market data was better than expected, as consensus forecasts looking for claims to rise over 400,000. Ahead of the latest weekly employment data, private payroll processing company ADP said that the U.S. economy created 978,000 jobs last month, significantly beating expectations. Positive labor market data is taking a toll on the gold market, and so that's one of the biggest reasons, is because of the labor market there. We also have rising yields as another thing to take into account and to consider here. But I think that a lot of this here is really evolving mostly around the economic numbers. But we're seeing the stock indexes were mixed to slightly weaker at midday, but they're up. Everything's the markets are kind of reacting here in gold and silver because of what's going on with the yield on the benchmark is fetching around 1.627, so that's up a little bit. So the bond yields are up, and we also are seeing, the dollar index. Again, the dollar is getting stronger on some of this news, and that is piggybacking on top of what's going on with the coronavirus. Numbers are decreasing as well, as more of the vaccine is becoming available and people are utilizing it. And with those who have the antibodies for the vaccine, for the virus itself, that have had it, well, you're essentially like having a vaccine in a sense, because your antibodies are built up. So those things are essentially, we're getting closer to herd immunity here in the virus. Now, obviously, there's a lot of politics around the virus and about the vaccines. I'm just reporting on what the market sentiment is. Please understand that. I'm not trying to make a political message with the coronavirus or the vaccines. I'm just giving you how the market is reacting to those. And we are seeing some positivity here. And I think that's good news in the short term. But there is more to this story. This positive labor data, job market data, we may see it continue even next month when it happens again. But I believe that these drops that we're seeing here are short-lived. I really do believe it's just kind of an injection right now. Hey, it's a feel-good moment. Because remember, the one thing that I've always been consistent about on this channel when I've talked about how these markets react and the prices move one way or the other, what happens is that psychology at play. It's the mood of the markets, and that is very difficult to predict. That means that, here today, gone tomorrow. I think these numbers will disappear soon. And why is that? Well, look at the housing numbers. The housing starts are slowing down. The housing market is starting to pull back a bit. And why is that? Well, cost of materials have skyrocketed, and that's because of commodity prices. There's a lot that is happening on the other end that are signs that people are right now trying to ignore, at least for today. Positive economic numbers with regards to employment is definitely a good thing. But what about wages? What about inflation? And lots of things that are still very, very concerning that will far outweigh this bit of good news today. And there's still a lot of people that are not working, and there is a lot of demand for new employees. But people aren't doing it because people are getting checks from the government, and it's cheaper for them, or they make more collecting those checks than they would in a job. And so the fact that we are seeing some positive numbers here is still a good thing. But if these numbers, or if this substance, or these supplies of money from the government keep happening, well, people are not going to. We're going to see these employment numbers kind of level out, and we may still see relatively high unemployment as we recover. We'll see how it plays out, and nonetheless, I think regardless, it's short-lived because of the housing starts and because of concerns about inflation, which are still here. There's still a lot. Our politicians want to continue to print money and spend it more faster than they can print it. And that is going to be a very concerning thing. And so we will see these prices probably snap back up sooner rather than later, is my guess. This is just a little blip, in my view. It's a pretty big drop for a day, considering how high gold and silver have been. But look at these numbers. When you think about it, we're kind of back to where we were not that long ago. But we're still well above $27 for silver. We're still well above $18.50 for gold. And because of the drop of silver being more than gold, the gold to silver ratio is still very high. And that is something that we have to take into account too. It's still above 68 right now. But nonetheless, I believe this is going to be short-lived. We are going to see higher gold and silver prices before you know it. They will snap back up. Something else is going to happen, or some other economic factor is going to come into play here that's going to turn this around. And again, we may see other positive aspects to parts of the economy, but the general overall health of the economy, I think, is in trouble because of, inflation, and we're seeing bubbles that are showing some stretch marks on them. In other words, you blow up a balloon too much, it starts to show little signs of stress in it, and sooner or later that balloon could pop. But the economy, the U.S. economy, is very resilient, and that's something we can't discount. And this is why I'm slow to call for a total economic collapse. But there are a series of bubbles, and some people refer to it as the everything bubble. And I don't think that necessarily all of those bubbles need to pop at once for there to be a rise in gold and silver prices and still have a resilient economy. The housing bubble could burst. There's others that are out there that could certainly burst as well and still maintain a maybe a further deeper recession, but not a collapsed economy. There is going to be a dollar reset. There's going to be currency resets around the world. They're already planning it. And my guess is probably that's why they are okay with spending all this money and printing it like it's going out of style. But that means there's going to be some revaluation, a revaluation of debt and of assets and of the whole monetary system in general. It'll be very interesting to see what comes out of this. None of it is going to be good, in my opinion, because everything's going to be tracked. All transactions will be tracked. But that's a subject for another video. But here we are. So this is why gold and silver plunged today. Those essential 3 reasons there to sum up there. We've got good employment data, better than expected. We are seeing certainly rising bond yields and the strengthening of the dollar. Those are the 3 reasons why gold and silver plunged today. And why the prices will snap back up, I think, is because of lowering housing. The housing market is starting to kind of move back into the negative territory. Less housing starts and the like. And maybe signs of trouble there. And we're also seeing other factors, inflation and government intrusion and spending. But there you have it. Let me know what your thoughts are about the markets for today. Very interesting indeed. As we explore these markets, as we like to do, remember, and this is why I'm showing you some gold and silver here, the fundamentals of gold and silver remain strong and unchanged. They are wealth preservation devices, savings accounts. Think of it as an insurance policy against economic instability of any manner or sort. And that is something we are going to continue to monitor and watch. And while we do that, well, we know that we are doing fine because we hold gold and silver. And that will continue to be what we do through this course. And be proud that you own these metals. And if you don't own a whole lot of them or don't feel like you have enough of them, well, this might be a good opportunity to buy on the dip. Just something to think about, even with these high premiums. So, hope you found this video insightful. Let me know in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, please share, comment, and after all of that, hit the notification bell and then subscribe.